High-risk investment. Trading on margin carries a high level of risk and may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with trading and seek advice from an independent financial advisor if you have any doubts. Market opinions. Any opinions, news, research, analyses, prices, or other information contained on this video is provided as general market commentary and does not constitute investment advice. Master the Markets will not accept liability for any loss or damage, including without limitation to any loss of profit, which may arise directly or indirectly from use of or reliance on such information.
Okay, hi everybody. Welcome to today's webinar. Hopefully you can all hear me okay. I'm just going to look at the chat window. I'm pretty certain you can all hear me. Glenn, Karen, I'm assuming you can hear me fine, and you should be able to see my screen in a second.
Yeah, all good, Gavin.
Okay, and then we'll put the screen of gold up here. I'll just reduce that down. Okay, good. Welcome everyone. Sorry for the slight delay. We had a couple of little technical things that we needed to deal with, but they're all done. And I'm just going to move this to one side. So you should all be able to see a chart of gold. Now, I'm going to start off today's session with you all by talking about something that we don't talk about very much. And it's called absorption volume. Now, of course, today's session, Tira will be joining us in the next 30 minutes or so. But for those of you that are new, we've had a lot of new people into the database. I've got some very special announcements to make today, which I'll share with you all as we go through. But one of the things we're going to talk about and focus in on today is price and volume. Now, there is a difference between what Tiru and Master the Markets look at and what we look at, but it's only very slight. So we have something you're all aware of called volume spread analysis, right? Now, for those of you that are new, that have just bought the software, don't confuse the spread, okay, with a bid-ask spread. It's the range of the bar. In fact, I prefer to change it and call it volume range analysis, because in fact, that's what it is. Now, I'm on a 4-hour chart of gold and I'm currently long. And I did an event yesterday. Now, for those of you that were in the event last week, the Think Link Create event I did on Saturday, and many of you couldn't get in, it's because it was full. All the seats went, which is incredible. And we're on target to sell 1 million copies of the book by August the 31st, according to the publishers. And it's now in 278 outlets around the world. So that's a really, really, really good way to end the week. But I want to talk to you about absorption volume here today. And I want to show you, this is the professional version. Okay. I have got the SMI indicators on here, which showed the confirmation that I'd be looking for. And then we've got here, and I'm going to go to the right edge of the chart. I'm not there yet, but I will get to the right edge of the chart. What is going on here? All right. And it's very, very clear what's going on. It's professional money absorbing supply on this bar. And this is a very common thing that happens when the market's in a bull phase. Now, you know, we're going to be coming to the London IX Trader Show a week tomorrow. So it's basically going to be the 4th of April at the London Grand Connaught Rooms. And Tiru and I have got a stand, and we're going to be trading live with a live account, both of us with live accounts. And if you can make it, come and meet us if you're in the UK. It's going to be worthwhile, because I'm going to be showing some stuff that I'm not going to be showing publicly until after the event. Now, one of the things that we look at in volume spread analysis is, of course, the volume. And here we have very, very high volume, which I can see because it exceeds our volume histogram here, okay, which it definitely does. It closes up near the top of the bar, but the next bar closes higher. Now, that tells me something. Even though it shows that there's potential of no demand on there, it doesn't react to it. And this is where we have to get our heads around saying it's not about red, it's not about green. Because actually, when we look at it, this is all green. The test is green. The bar color is green. But we've got to be a little bit broader than that in our thinking and our concept. And that's what Wyckoff taught us. Wyckoff didn't have a computer. If he did, he'd used it. He would have definitely used it. What Wyckoff had was the tape back in the 1920s, the 1910. Same with JP Morgan, Otto Kahn, JP Morgan, all of them they were tape readers. They didn't have a computer screen like I've got. Broadcasting from my new house in Sandbanks in Dorset on the south coast. They didn't have this. So they had to rely on basically their tape reading skills, which is what I'm going to talk about today. And I'm sure that's what Tiru will touch on as well. So what is tape reading in the day? What did that actually mean? Because it's going to play a big part in today's seminar. When I was learning all those years ago, I mean, our company is actually had its trade guide, the 25th birthday on Sunday, but actually the company's much older than that. It's actually 45 years old because we brought the company from the late Tom Williams, and it used to be called Genie Software Limited many, many years ago. So it's actually not 25 years old, really. It's actually probably nearer to 40, 45 years old. But the point is, when I was learning from Tom, and when I first met him, he showed me a ruler, a giant ruler, taller than me. It was 7 foot, metal or steel ruler. And I said, well, what the hell is that for? You don't need anything that size. He said, yeah, we did. When I was in Beverly Hills, Gav, that's what he used to call me, Gav, I would draw the charts for the group, the syndicate, to see what's going on the daily, the weekly, the monthly, and the yearly on several stocks. One of them, very famous stock at the time, was Taladyne. And Taladyne was a heavily manipulated stock of which the syndicate held a lot of stock. I said, so how did you draw the chart? He said, well, the two girls that worked in the office with us, they would read they'd get the ticker tape for Taladyne. Let's give you an example. And it would show on the ticker tape, and you could go and Google ticker tape. I'm not going to explain it all to you, but that's how it used to work. And then Tom would take the tape, basically tape reading it, with his colleague, and they both draw a chart. They'd look at the open, the high, low, and close, although the open was relevant, actually. That in later years, they realized they didn't really need the open at all. They wanted the high of the bar on the day. Let's imagine it's a daily chart. This is a 4-hour chart in gold. They wanted the low of the bar, and then they wanted the closing price. And the close was the most important part. Where did the price what did the price actually do on all this volume on the ticker? Or indeed, if there was very little volume on the ticker, what did the market tell us? Now, there are 3 universal laws that drive price. It's never going to change, and it won't change. The first one, which I think everyone seems to understand, but I'm not totally sure, but I think they understand, is the law of supply and demand. The law of supply and demand. You hear about it when OPEC meet, the oil producing countries around the world, where oil is very heavily manipulated. And I know Tiru did a great event last week where he nailed the price of Brent crude oil, right? Got it exactly right. Because it's very easy to see when they're moving price. And so you can see they talk about this. They say, well, we've run out of barrels of oil. We can't supply the market. We've run out of oil. And then a few weeks later, oh, there's so much oil that the price is going to come down, which is what's been happening. And then I remember doing my presentation in MIT Boston, where they talked about British Petroleum, BP, we can't cap the well. And if it keeps gushing and we can't cap it, it'll be indefinite because there's so much oil underneath the Gulf of Mexico that, I mean, come on, we've got to be wise here. So supply and demand, or no supply and no demand, is very important. As I said, supply and demand is important, but what about no supply? No supply means simply no selling, NS. You can call it either. No selling pressure is what Tom told me. He said, if the market's falling on reducing volume into an area where there was previously high volume, there's no selling pressure. And you could call it NSP, no selling pressure. And it's quite amazing when you see it, because we're seeing it in gold right now. And what happens when you see that no selling pressure is you start to see the market building a cause to the upside. And so when that happens, which it happens a lot, you start to see what I'm about to show you. So here's your resistance area. SMI, smart money indicator, downward pressure. SMI, no demand, downward pressure. SMI, upward pressure. It's trying to build a cause. Then it takes the top out, this old area. This is so important. Okay, it's so important because when you read my book or you read Tom's book, Master the Markets, Tom says in his book, weakness appears on these high volume up bars, which it does, but it doesn't mean that. I would say 90% of the time, the market, if it breaks the low of that sort of bar, you'll have a very nice short trade. But there are times when it just doesn't happen. And you say, what's going on? And it's in my book. It's called Absorption. Professional money are bullish. Now let's play this forward for you. Now we can see, I'm not yet at the right edge of the chart, by the way. I'll get there. But we can see we're in phase one of an uptrend on the 4-hour chart. On the smaller time frame, we're in phase 3. Hence the reason for being long. So let's play this forward to you so you can understand it. Now, first of all, when you get high volume, we're looking for something called a test. All right. And there are 9 different types of tests, according to Professor Hank Pruden. But in the professional version, which I'm using here, we only have 2 types of tests. And the one that's the strongest is what we call a test in a rising market, which is that one there. Okay, and the coding in the Pro version adapts to show that. Now, as we move forward, we can start to see what's going on. We get multiple testing. We've broken the top of the absorption bar. The market gyrates. I'm sure Tiru, when he joins us, Tiru, I don't know, are you there? I'm not sure if you're there, but if you are, let me know. Just interrupt me. And we can see here the testing of the top of the bar. It's consistent of the absorption bar. See how many of them there are on the 4-hour chart. And we start to move up now because of that testing. Now we're at the right edge of the chart now, which we can see. Right, and you can see it here, and I'll just move that to the right. Okay, because of these, they're signs of strength. And you've even got an SMI indicator, several of them, but these 2 here that happened 20 odd hours ago just reconfirmed, and this is what Tiru and I are going to be showing at the show. We're going to be talking about learning the truth of the market. What is it telling us? Now I've got some really good questions from clients that I'm going to answer here today. Okay, because I think it's very important. So I think that what we want to do here is start to break it down. and break it down into bite-sized chunks. So we're going to do gold first because I'm still long, and I'm going to give you the profit target because whilst I don't, my dog agrees with me, by the way. You can hear her in the background there. I've got two spaniels, and they do when I'm trading. Ironically, I always say to people, you don't want to have anything other than the chart. You want to be focused on it. But the two dogs are very good. When I'm in the office here and I'm looking at the screen and I'm focused, the two dogs sit on either side of me, and they don't. The only reason they'll bark is if I start to get a little bit excited and go, "Oh, I'm going to do this," and I'm talking to the traders out in Jib. Then the dogs will bark, and you might hear that. Yeah, here we go. They basically what they're doing is they're hearing my voice and they react to it. It's quite incredible how spaniels operate. They're very clever dogs. So let me now go down to a time frame. So what we'll do, so we know we're in an uptrend. Everything in the system tells us that. Now here's the time frames that I look at. The next one is going to be a 1 hour chart. Okay, and you should be able to see that load up any minute. And it's still here in the phase one. Now we can see multiple testing of the breakout bar. Now if that was serious weakness, we've taken out these lows, but it didn't do it. It didn't do it. It's actually bullish, and that's what bullish behavior looks like. And so when we see that, and we've already got absorption on the 4 hour chart, then it's a question of at what point do we want to get in. Now I'm going to give you the time frames that Tom and I would use for gold, and then I'm going to look at the Nasdaq for you because that's really interesting. But the time frames Tom and I used, and I've got a recording. I did play this the other day in the private mentorship course, and I'm gonna see if I can find it for you, because what happened here was quite interesting.
Tom Williams here. I've been working with Gavin over the last week, trading the Smart Center Pro in VSA, and with remarkable ease and success.
I've got all the recordings which I found on my old phone. Give you another example.
Hi, Tom Williams here. Smart Center Probe.
Yeah, that was funny, that one. What happened was with all these recordings, I go back in time and listen to them. They were filmed or recorded many years ago, and some of the recordings are absolutely brilliant because we end up laughing and stuff. But I've got them all, and I've got nearly 86. Well, there is 86. I'll give you another example here because this is something I want to share with you all.
Hi, this is Tom Williams here. We have bag holding. Mm-hmm. This is a serious sign of strength, and you ignore this signal at your peril. This is bullish.
And that is correct. And so I've got all of these little nuggets that we're going to put into TradingView, the pro version, so that when you see that type of indicator, you can listen to what Tom says. Now, I didn't know I had these recordings. It's by pure, well, it's not luck. There's no such thing as just luck. It was meant to find, as I've released my third book, these things have happened. And I've been listening to them overnight. And to say it's an inspiration is an understatement, because I realised how much knowledge he gave, not just through his books and his webinars, and there's the chart reading masterclass, which if you haven't seen it, you really got to get that. But just each and every principle that I've written about in my second book, The Complete Volume Spread Analysis System Explained, Tom and I discussed, and some of them are the same thing. No demand, no supply. But there's different versions of it, and this is what I said to Tom. Why do we have all these different no demand bars? Why not one with one piece of code? And he said, Gav, because if you look at an oak tree, you're going to see an oak leaf, right? And it all looks exactly the same. But you put two oak tree leaves under a microscope and you compare them, they're going to be different. But they're the same. They look the same on the outside, but they're different on the way they're structured. And that's how VSA works. Each indicator, and there's 368 in Smart Center and Smart Center Pro, has a different piece of code attached to it that is been tweaked. And that's what many traders don't understand. They go, oh, well, hold on a second. What do you mean it's been tweaked? It means that the programmer, the original programmer, bless him, the late Bob Harwood, he would put a piece of code in, the signal would work perfectly, and then Thomas said, I want to improve it and do something else. And they didn't throw the signal away or the indicator, they kept it, which is why you got all the indicators. Now, we've simplified it in the Pro version, which we've got here in TradingView, to try to simplify it for traders and investors around the world to make it easier. And we've got several clients, some in India, some in China, some in Malaysia, quite a few in the US. One of our great clients is in this room, I believe, which is Charles. You know, I will call you Charles, by the way, this afternoon. But they've all helped in various ways with feedback. And that is very, very important, because without the feedback, you never quite know what is going on. You go, well, I think I've got it right, but actually you maybe not have got it right. And you go, oh, okay, I made a mistake, or the programmer made a mistake. But ultimately, what we want to do is show you how to understand the chart. Now, as I'm going to do this, I'm going to look at the questions and see. I see a lot of people joined us. I knew it would be busy anyway. Let's have a quick look at any questions. No, I don't see any questions at the moment. So if you've got questions, you can email Glenn, as you've seen there, or you can type them in and Glenn can ask me the question. So Glenn, you can by all means just interrupt me if there's any questions that you see, because I know you're monitoring this. Just by all means, just say, Gavin, there's a question, and I will answer the question for those that have got questions. Okay. I'm not sure if Tiru's here at the moment, but if you are, Tiru, let me know. And then what I'm going to do is I'm going to put up the NASDAQ now. So we're going to put up the NQ. And we're going to put up the futures of the NASDAQ, okay? And we're going to put up, to start with, the 4-hour chart. Okay. Now, I've been asked a question about this from some guys in Poland, and I believe you're in the room. And I would have to say that you read the book, which is fine, Trading in the Shadow. And there's an indicator called no demand at market top, and then a gotcha bar. Now it's on this chart. All right. So this is confirmed with the SMI indicator as well, which is, again, happens quite a lot. It's just more confirmation about what the market's telling us. Now, there's a few things that are going to happen at the London IX Trader Show that we're going to do. Number one, we're going to be trading multiple charts in multiple timeframes. Now, I can tell you what I'm going to be trading. I can't speak for Tiru. He'll have to confirm that. But I'm going to be trading gold, Bitcoin. I'm going to be trading the NASDAQ, which is this, the S&P, and the FTSE 100. Okay? And so those are the main ones. But we're going to look at stocks as well. And the stocks that I'm going to be looking at very closely is ARM, ARM. You might want to make a note of these because these are the ones that are moving. NVIDIA, obviously, which we'll look at in a minute. Okay. ARM is a really good one. I know this company very well, ARM. Okay. Very good chip company and very interesting. Then obviously Apple, that's a no-brainer. Okay, and then the main ones, the FANG stocks. So you've got Facebook, Apple, Nvidia. You can list all of these different stocks. But the bottom line is they're all doing something similar because they're retracing. And that is an opportunity because of these things that's going on with Donald Trump at the moment is causing unsettlement in markets. They don't know what they've just announced today. Now, if you're interested in buying a stock, you want to start looking at car stocks, Ford, Tesla, all of those. The reason is they're saying that apparently the US is going to put a 25% levy on all of the imported stuff, including parts and labor. Think how many Japanese cars there are in the US. I mean, I know because our family owns 3 cars and they're all Nissans, in America. So I know not just 3. We've got other vehicles, but there's 3 Nissans that I personally have, and basically they need parts to when it goes for a service. They need a part. They're saying it's going to cost 25% more. That's only going to hit the consumer, isn't it? It's not going to hit. It's not going to help anyone, in my opinion. I'm not sure the logic behind it, but I'm not a politician. I'm a trader, so I trade what I see. So let's go and have a look then. The Nasdaq at the moment has got weakness in it at the moment. Okay, we put the hourly chart up. I'll move it. I'll put the 1 hour chart on. And we got a reversal just coming in now. All right, so I will pretty be comfortable that this is going to go to 20,000 today down here, maybe tomorrow. It could take a day or two, because yes, what we've got is an attempt to rally. The SMI indicator picked it up, but unless it gets into this area here, which is my buy zone, and it's not hit it, it's rejecting it, then this is still in a downtrend, which we can obviously see. It's not trending higher at all. And if we go back in and look at the top, you've got no demand at market top. All right, so you've got exactly that, and then it's gotcha bar, secondary gotcha bar. Now we've got a third gotcha bar forming now. Okay, so the round number is where price action will be attracted to. So we'll be looking somewhere in the region of around 20,000. Okay, and the reason I say that is because it's already been down there once, tried to hold it here, as you can see, where the SMI indicator said it's going to be pushed up. This is what Tira would call the dance of the market. It is exactly that. Very difficult to trade it when it's doing this, because it's non-directional. It's going down, then it's going back up, then it's going back down, it's going straight back up. So let's look at some stocks. And then I'm going to see, Glenn, is there any questions from anyone? I can't see.
Yes, Gavin, I think Steve has asked.
Yeah, go ahead.
Yeah, are there going to be description boxes of the different VSS signals, like on the NinjaTrader or Before versions?
I am working on it. The way that the coding works in TradingView is different from the way an executable file works, right? Which you know. So it's not as simple as left clicking on a box and up comes the dialog box, which is why I wrote my second book, and all the dialog boxes are explained in the second book. If you haven't got the second book, Steve, get it. I'll give you it. Just email me. I'll send it to you. It describes all the different types of indicators. Now, the way there's a pro and a con here when it comes to TradingView. The pro is most definitely the fact that you can use it on almost every device. I've got it literally running now on my iPhone. I've got it on my Samsung, and I've got it on this computer. And it's running off the internet, and it's running here as a web-based client. So I can basically look at it anywhere, and it produces all the indicators. And we've got 6 scripts in Pro, 2 in Lite, which we're going to make very competitive. The Lite version will be, I'll talk to Glenn and Karen about this afterwards, but we're going to make that a specific, very competitive product for the Indian market specifically to start with, but then we'll roll it out. And it won't be anywhere near the pro version, but it will be a good place to start. And we'll include my second book in there. Now, here's the problem. Because you're running it and you're not running it as an executable file, if you left click on the indicator, it doesn't bring up the dialog box. And we're working on that right now to see if there's a way in TradingView to do that. Not that everyone needs that. What they want is a system. And if they can refer to a booklet, which is what I'm probably going to produce, which says, look, this signal here, when it appears, you just refer to the book. And it won't be a big book. It'll probably be 20 pages. You don't need more than that. And it will be taken from my second book. That will make it much, much easier, I think. But we are trying, Steve, to see if we can click on a dialog box and bring up the dialog box, because I know it's helpful. But at the same time, you've got to work with the limitations of the program you're working within. And, I don't control the code for TradingView. I control the code for TradeGuider. Maybe Glenn and Karen might come up with an idea and say, yeah, okay, I think we might be able to do that. I don't know. I'm not that familiar with TradingView as a program itself, but we have got a team that are. We've got a guy out in Colorado who's very, very good at this, and he's looking into it. So hopefully that answers the question on that one, Steve, for you.
Yeah, Kevin, sorry to interrupt. There is one more from Anthony.
Yeah, go ahead.
Can you please elaborate on the gotcha bars?
Yeah, no problem. So that's an easy one, okay, because there's one up here. All right, I mean, it's easy. Now, we can see here the market been going up and up and up and up for an hourly chart, the NASDAQ. Now, when I was talking to Tom, the name of that bar was mine, okay? And I can't unfortunately put a copyright on it, but it was in my first book, Trading in the Shadow. And what a gotcha bar is really straightforward. It's going to have a wide spread, Anthony. First of all, you're going to have a wide range. It's not going to be a narrow spread. Doesn't exist. Okay, that's the first thing to keep in mind. The second thing is it's going to happen after the market's been going up. They don't happen as the market's going down. They happen after the market's going up. Often you'll see them after some sort of shakeout, like here. Now, what does the word gotcha mean? Why did I come up with that? Because I'm an ex-policeman. When I nick someone, I'd say, I gotcha. I gotcha. I've chased you. I gotcha. And then I looked at a price chart and I'm seeing I'm long, and all of a sudden, bang, the market falls. Market got me. It gotcha. How did it do that? I couldn't see that. But I can now, because I can see the signals in the background telling me they're about to mark it down. Think about the logic. You're a professional smart money trader, which I like to think Tiru and I fall into that category. And we're long. And we've got a trailing stop, which is what I use, which is why gotcha bars don't cause me a problem at all, because they stop me out and I make a profit. But what is the logic behind it? Well, a market would be great for every retail trader in the world if the market just kept going vertical and never ever fell. It just kept going up and up and up and up and up. That doesn't happen. It can't happen. Because otherwise everyone would be going long. But no, so they do a gotcha bar. And this is the big banks at work as well, big money, and syndicates. They can see that actually if they can wipe out the longs and then buy back at lower prices, they can make money, Anthony. So basically, look, that's a gotcha bar. It's completely got a shakeout. You think, oh, that's a sign of strength. Narrow spread, volumes increased. It closed near the top, but the next bar collapses. And if you're using a small time frame, which I do, like the 5 and the 3, you'll see this happening. and you can short it. But now you can see that's a gotcha bar. And then they try to support the market down there, but it doesn't hold because it's weak. So the gotcha has got them. It's got the retail traders. And the software is marking this out, saying, oh, I tell you what, if you go above the top of that bar, we can think long. It doesn't do it. Hence my YouTube videos. And then we can see what happens. It tries to go up above it now, and it's rejecting it live, down to 20,000, which is where it will go. So, okay, let's prove the point. That's your gotcha bar there. This is your buy zone if it goes above it. It's never gone above it, hasn't touched it. In fact, it's gone up on no demand. SMI, no demand. An attempt to support the markets down here. You've got a range. You want to trade this short? There's a good short here. 3-minute chart. There's your no demand bar, as we've been talking. Okay, 20,000. 20,000. That's where it's going to go. I'm 100% certain. How can I be 100% certain? Because I've seen it so many times. I believe in something called NLP, which is neuro-linguistic programming. I recognize this pattern. I've written about it in the book. It's basically here, you've got a mushrooming over of price. Confirmed here, it's now phase 1 downtrend. Of course it is, because you've got no demand. So gold's been going up, this is going to go down. And until Tiru joins us, I'll stay with this, I'll show you. And you'll see that the trending system in the Pro here, which are these red dots and these red bars, every time the bar closes, we can analyze it. These 2 bars here, you see the orange lines, are marked out from a previous bar where the selling started, PS. And all it's doing is marking it out and saying it's now in that zone. Watch and believe, because once you've got this, again, now I've got a couple of announcements that I do want to make. Glenn, do you know when Tiru's going to join us? Because I know there'll be people who want to ask him questions as well.
He'll be joining us shortly, Gavin.
Okay, all right, that's fine. No, I just want to make sure he's coming in. That's absolutely fine. I'm going to stay with this, and then if you've got questions, absolutely no problems at all. I'm just looking at the other screen here. Sorry, I'm just on the phone on WhatsApp with the guys, the traders, and they're saying go back to gold. Okay, all right. I love this. This is what is great about doing these live events. You go, okay, let's go to gold then. All right. Yeah. They said, look at the 3-minute. Yeah, and they're absolutely right. Yeah. Okay. So, all right, I'll explain it. That's a great one. Thanks, Rob. He's one of my guys. He said, right, they're listening in, okay, and they're saying, right, you're talking about the short on the NASDAQ. Go and look at the gold 3-minute chart, because you've been looking at the 4-hour and you're saying it's bullish, it's going up. Look at the 3-minute, which is what they're trading. It's very, very clear. This couldn't be better. So we're in an uptrend. We can see that, right? We're in phase 1 on the 3 here on gold. This changed actually. It was actually on phase 2 and it's gone back, but it's because it's now building the cause. Look at the volume on this down bar, all right, here, and it's got PB. Now, if you read my second book, that's professional buying. It's what it is. In the second book, it's called potential professional buying, but it doesn't matter. It's buying. How can we know that's buying on that volume? All right, we've got to look at the range of the bar, which we'd all agree is wide. It's a wide range, meaning that it's got a high and a low that's very high compared to that one, which is narrower. And this is very narrow, right? So keep in mind, we're looking at the range or spread, hence the word, I'll repeat, volume spread analysis, volume range analysis. We look at the closing price here. We're not got the open on here at all. We don't need it. Okay. And then again, we can see the volume is very high. What does the market do on this volume? The next bar closes higher than the close of the previous bar. That's where VSA is unique. It doesn't look at one bar. It's looking at two. In fact, it's looking at five, if I'm being honest, but it's two in relation to chart analysis, because it's saying if that's all selling volume, the next bar would close lower, right? It has to. But you're only on a 3-minute chart, which is why multiple time frame analysis works. You're not using one time frame. You're not just using a 3-minute bar. Right? We're going to look at other time frames. And I started off with a 4-hour bar. And I said gold's going to go, and it is, and I think the NASDAQ will hit its target. And we're doing this in real time. Now, again, if you can get to the London show, IX Trader show, it's the week tomorrow, 4th of April. Then come onto the stand. We're going to be trading all day. Right in front of you, you can see it. And what happens here? We build the cause because of the test. Now, this is the new indicator that I developed called a test in a rising market. Now, that happened at exactly now. It's called a test in a rising market because another one happened there. That's rising. That is in a downtrend, but it's still important because of what's happened on these two bars in the background. And then you've got multiple examples here, and again, SMI here, and that's why the price is going up. So Tom's favorite setup would be these two bars here. And I've got a video, I've got a recording of him explaining this, which I'm going to put together as part of my next course, explaining exactly that setup. Because I'm doing this, like, this is not in hindsight. Well, I suppose you could say it is in hindsight because that happened, but the price action now is not in hindsight. It's starting to move. And if I go back to the NASDAQ, okay, you can see the opposite side of things, right? It's a complete opposite. You've got no, all right, and we're going to go and hit 20,000. And I'm not quite sure if there's anything particularly difficult about that, because you've got the opposite of gold. You've got the mushroom. Gold has got the saucer. The saucer is like a cup of tea, as we call it in England or India, where everyone likes tea. And I'm sure they do here in England, right? You've got here a mushroom though. And here's an old area to the left, all right, where it came down, reacted, and now it's coming back down, and it's got no demand right behind us in a downtrend. Now, we're in the phase one down. This will all turn red. And I've got another 15, 20 minutes with you. I can stay for longer. I'm quite happy to, actually, till Terry gets here. But you'll see.
I'm here, Gavin.
Oh, there you go. You see, you wish for someone to appear, and he's like a genius. He just appears.
Exactly. You rubbed the genie lamp, and I was here.
I'm rubbing my genie lamp now. There you are. Now, Terry, I'm just explaining here. We're going to the IX Trader show next Friday, a week Friday.
Yeah.
I've got a very clear target here, and I've got the guys in Gibraltar looking at this as well, and they're saying it's going to 20,000, right? And since we've been on air, it's been falling, and gold has been going up. And your SMI indicators with ours, I mean, they're just absolutely superb. And you and I have been saying, for a long time now, that we're telling the truth about the markets. Which, something this morning, I proved it to myself, and I said, well, do you know something? Looking at, I met my publisher this morning of my third book, and she said, you need to write a fourth book on trading. I said, well, I've already done 2. I don't need to do another one. She said, yeah, you probably do. But I said, okay. And then we got into it. I'll talk to you about it afterwards, Tidra. It's a long conversation. But the one thing that did come out of the conversation was, I have had a lot of emails coming in about chart reading and tape reading. And today we're talking about Wyckoff, price, volume, few customers have come in and said, what's the difference between an SMI indicator, a VSA indicator? And I think, you know, people get too wrapped up in all of this. You know, what's the difference? They're not particularly different. They just look at slightly different coding. And, you know, where, you know, you might look at a price target and say, that's my target based on X, Y, Z. I might say, well, no, I haven't got a target and I'm going to let it run. And what I've said to everyone who's coming to the show, and I'm getting a lot of response to that, and I'll talk to you about that again afterwards with Simon, is, okay, when you're looking at the charts, will you be looking at just VSA? Will it be just SMI? And I said, no, it's a combination of two individuals who've been trading for the best part of 40 years, probably longer, and looking at how we analyze a chart based on volume and price, which is very important. And the main difference, I think, and you can explain this, is you've come from it. You know, I know your company's called Master the Markets, and people say, well, that's like Tom's book and stuff. It's completely disconnected. It's not relevant. Turu started his business based on a mentor who taught him how to read the price charts and also to use statistical knowledge to actually quantify. He calls it quantify. I don't do that. I'm very different in that manner, in that I don't try to quantify anything. I just trade what I see and see if I can make some money. I mean, that's pretty much how I do it. They do say, it's ironic, and I do say this, that one of the things that we have to say as a regulated entity, certainly I do anyway, is past price and past performance is not indicative of future performance or success. And then the first thing you do is go and look at the past. Yeah. So what is the point in making that statement? If you're regulated, you've got to be very careful. But what do most people want to know? And Turu pointed out, he said, well, Goldman Sachs, JP Morgan, so on, they actually show past performance, but they do that in a regulated way. They say, well, we're regulated. We know that last year the X fund made X amount of money based on this strategy. And I think that's perfectly acceptable to show, in my opinion. But then if you're going to show it, why state the disclaimer in the first place? Just don't read a disclaimer. And that to me is the conundrum. It really is you state at the beginning past performance isn't this, and then the next thing you do is you say past performance. Turu and I make a point of showing these live charts, which we're doing now. And we make a point of showing it at the right edge, not PowerPoints. And at the show, we will be doing live. It will not be PowerPoints. There's no point in doing it. Now, I've got an email that's just come in, actually. Are you videoing? That's a great question, and I don't know. Are you going to be videoing your booth from the show? I have no clue. Terry, what's your thoughts on that? I mean, that's the second email I've had on that. You know, they're in America and Canada. Can you put a video camera on the booth and can we watch? I don't know what the rule of. I'd have to talk to Simon, I'm assuming.
I think we can do it. It's just, yeah, it takes time to set up, isn't it? Hopefully Simon has got someone. Last time they had someone videoing it. So yeah, we can see.
Yeah. Okay. All right. Well, look, I'm going to hand over to you. So here's basically, I'll give you an overview of what we've been looking at.
Yeah.
So it's been, obviously gold has been long, and we're still long. We've got this Nasdaq short. I was going to show some stocks which you might be able to show for us. Specifically, the list I've got is Tesla, because of the news about Donald Trump, and I'm just about to buy a new car, by the way. So that's my next job this afternoon, is to go and do a test drive. But it's not a Tesla. I won't tell you what it is. But so you've got Tesla, you've got Nvidia. Okay, so those are obvious. There's a stock Turu called ARM, ARM.
Yeah, I heard of that. Yeah.
Yeah, a really good stock. Okay, it's a chip company, but that's looking really good. Apple, obviously, that's gonna be in there. I've got another list of stocks that I'll give you for our private mentorship stuff that we're going to be doing. And I'll send you that list, and we can talk about it afterwards. We'll have a chat afterwards, because I've now managed to find a screen for us, by the way. If you can confirm that your projector works, then I've got the screen. It's good, and it works. It will work perfectly for the show, so that's fine. So, with that being said, I'm going to hand you over to Turu now, who'll do. I'll be in the background. I'm not going anywhere. At least not till 5:30 when the guy's coming to pick me up to test drive this car. But I'm just explaining to you here. You've got no demand in a downtrend. You've got the mushrooming of the top, and we've got the round number at 20,000. And if it breaks the low of that line that I've drawn out there, which the software's done, the orange dotted line, then
Yeah.
you'll see a very quick collapse in this price. And as we come into Friday tomorrow, a week before the show, this will just prove what Turu and I have been saying, that we do this in real time. And you can look at it in the hindsight. You can do, and obviously you look at it and say there's a no demand bar since we've been on air, and it appeared on the 3-minute chart. It was very clear. It was clearly a no demand bar, and it's starting to react to the no demand. And what Tyrrell will show you is why is it then that we get an SMI, no demand. It's like if you were to frame that out, which is what I'm trying to do, and put a block around it, all right? So you put a line under there, a line at the top, you put a block. And as soon as it breaks it, it takes the trade for you. We're very close. We're very close. Because I can show you thousands of charts like this, where the SMI indicator is, and Terry, one of the questions will be, you've got the SMI indicator, then it turns blue, it goes back up, and then it comes back down. And I know you call it the dance of the market. It's exactly right. It is a dance, and the markets don't go in one direction straight away. I wish they did. We'd all be billionaires, but it doesn't do that. But that indicator, no demand on very low volume, into this, it just got another. Now, isn't that amazing? See, I can't write this. Look. We'll just stay with this for 3 minutes before I hand over to Tiri, if that's
Good point.
yeah. We'll watch. If that's confirmed, all right, that will turn solid red and that will break. And you cannot write this because I'm not producing these. The software's doing this. It's nothing to do with me. And it's got everything in the background. Okay, you've got it here, right? Now, if that bar closes lower than the close of that bar here, that will turn solid red like that. And that's what the software does. It's very smart. So we'll keep an eye on this. And Tira, I'm going to call you after we finish the webinar, because I've had a very interesting meeting, which I want to tell you about, and it'll affect all of us. It's very good. Very good. Okay, so 20,000 is the target. Okay, the guys are on now with WhatsApp. Let me have a quick look. Okay. They've moved stop through further. So stop is now at 20,065. Okay, fine. Yeah, keep that there, guys. Yeah, I know you're listening in. That's fine. Yeah. What are you on? You're on YouTube, right? Okay, that's fine. Yeah, it's going to hit the target. Okay, just stay with it. I've got you on the WhatsApp group as well. Is John there? Can you just ask him to put him on WhatsApp for me? Yeah, because I'm on a live webinar. Yeah, I can't say that. No. Yeah, phase 2 on the 30. I've got that. Yeah, I see that. Okay. Hi, John. Yeah, I can see you've joined. Yeah. You're on YouTube, right? Okay, that's fine. Okay, it's gonna go. Yeah, I agree. All right, it's perfect. Well done. This is great. Yeah. No, I'm broadcasting live. I'm with Tiru Nagapan from Master of the Markets in the background, and Glenn and Karan from India. They're in the background as well. So. Okay. Yeah, that's what I saw. So anyway, no demand, just to confirm, no demand is confirmed. Okay, and we're going to go and hit the target now, and then I'm going to hand over to Tiru. We're coming right down to here. Yeah, it's exactly right. Yeah, let me just see where they put. Okay, so you've now got the downtrend. You've got the mushrooming over of the top. You've got your no demand bar. You've got your confirmation bar. Now, if this bar closes lower than the close of that bar, it's gonna collapse very quickly. If it closes lower, it has to close lower. And I would also use the 5 minute as well, John. John, use the 5 as well. Don't just use the 3. Okay, we can see that everything's in the downtrend. Okay, the 15 isn't there yet, but it will do. But if I put a 1 minute chart up, you'll probably see it clearer. And there's the no demand on the 1 in the downtrend. All right. There's the SMI indicators, pretty much confirming what we already know anyway, that you know, it gyrates. And I'm sure when I hand over to Tiru in any minute now, you'll see the same thing. And it's the same with gold. Gold's doing the opposite. Okay, I'll just give it 1 more minute, and then I'll hand you over to Tiru, who's going to explain everything, because it's been an hour since we started. But I hope you're enjoying this because you're seeing it live. And then Tiru can put the meat on the bones, if you like, talk a little bit about what the SMI and VSA does together, which we can see. I mean, I don't think you have to be a rocket scientist to figure this out. If you've got no demand in a downtrend, it's volume that's less than the previous 2 bars. Keep that in mind. That's how it works. So it's tried to rally into this bar where the SMI indicator has shown us there's downward pressure, and the volume VSA, which is why we're working with Master of the Markets and the team. It's very simple because you can see how the dots connect. They have to.
Another great example, Gavin, is on Brent. It's happening right now.
Okay, I'm going to hand over to you because I've done an hour. Yeah, and there's going to be questions. I'll be in the background listening in, but I've got a couple of calls I've got to make because I've got the CME group that I've got a call with like in 10 minutes. So I'll be in the background if you need me. All right?
Yeah, no problem. So let me share my screen, guys. If you
Yeah,
can
take the screen.
let me see if we can put this trade. I think I'll call out a trade very soon. It's based on the same principles you've been talking about, price and volume. Some of you I know are emailing us and telling us that you've been following this exact methodology and making some really good consistency out of it, and showing that on your spreadsheets and your performance, and your account statements are showing that. So here I am seeing on Brent, if you take a look, another textbook example is coming up. I just want to go through all the others. I've already analyzed it. I think this is one of the best ones I'm seeing at the moment. So here, traders, what we are seeing is a downtrend phase 2 on the daily time frame, right? I'm aligning the trends over here. Now on the 4-hour, that's an uptrend phase 2, right? So this is your downtrend phase 2, 15 minutes. At the moment, it's actually, let me go on to the 1-hour. On the 1-hour, it's showing a uptrend phase 1 at the moment, if I'm not wrong. There you go, right? And interesting, now can you see the volume spike over here on the red bar? Next bar then closes higher with a confirmation, turning that into an uptrend, right? And then after that, we had a little bit of selling, right? And then now you are getting the bounce back up again. So you see, this selling that you're having over here, it's not, you can see that it's not really true selling, okay? Just to fake out the stops a little bit, okay? So what we will do now on the 15-minute, because I'm getting the trend alignment across, right? Yeah, let me zoom in. Thanks for that, Glenn. Let me zoom in. A little bit more clearer for you guys to see. Okay. Because I'm getting all the direction alignment across all the time frames, what I will now wait for, right, is after this buying, now you had a top confirmed. I will wait for this 15-minute to confirm before we get in. And then we will take a target for the 1 ATR. Now, this is the point where you need to wait, okay? We cannot rush into the trade out of impulse. We have to wait on this. Now, very quick thing, what I will also check on the daily time frame, I'll check the ATR range. Has it done its range for today? This is $1.29. How much has it done for today? Let me see. I can do this very quickly. 74, good. So the range hasn't been done as well. 50 more cents to go, even if you check from the high to the low. 73.23 minus 72.47, isn't it? That's about 80 cents. So that's good. 0.8 times 120 does about 96. Even the 80% ATR range hasn't been done. So it's all aligning together, traders. And in terms of this as well, the stretch principle, I'll give you some reference videos. I know I'm getting a lot of messages saying, where do I understand these concepts? Because I'm not very familiar with them. So if you see, even on the stretch, right, this is the open and the stretch is equidistant. If you see, it took out the lower stretch, but it hovered around there, found some support. Now it's bouncing up, supported by volume. After I get all this confirmation, then I go on to the 15-minute, once everything is aligned, and then we will wait on this for the confirmation, the blue dot to happen. And that's where we will then get in. Now, if we do get a sudden outburst of buying pressure coming in, then I think the first point that we will look to get in is for the high. Okay, so we'll wait with this order first, just in case we get a sudden breakout. And if we get an earlier one, then we will adjust it, okay? So I'll give this first trade call 72.85 is what the, yep, that's the correct one. That should be on the red. I'll type it in for the boys also to put that in. And this is for the high 73.24 we will go for. Bit of a spread. 73.25. And then the ATR number over here, it's telling me is 22 cents, isn't it? On here, this one will be 20 cents. I'll just check it over here also. Here, on the other broker chart. Right, let me see. On the other broker chart, yeah, it's about 20 cents, that's fine. So, okay, so that's good. So from here, 73.23, 20 cents, 73.43, isn't it, traders, right? 73.43, okay? So what we will do now, I will give this call. This is our first trade call, okay? Now, so Brent oil long entry is for the blue line, right? 73.25, accounting for spreads and everything. And then stop loss is for 72.85, right? And then target is just for the 180R number from the breakout if that happens, okay? So that's what we got over there. That's our first trade call there. Let me just give it to everyone here. There we go. Right, I think that everyone should have it there right now. So wait on this. Now, if I do get a confirmation bar, a blue dot, before this blue line comes out, taken out, then I'll enter it early on the close of the blue bar, okay? So either one, we'll wait and see, but we'll wait with this pending order first. If the blue dot happens earlier, then we will delete this current order, okay? And I believe you guys understand the rationale of this. It's because we saw a big volume spike here, and we are expecting that to be supported on professional buying here, which is indicated by the VSA indicators, the PB. And then we are seeing this retracement to sustain and to carry on with its trend. And I'm getting a much more clearer confirmation on the 1 hour time frame over here, right? It's quite clear with the professional buying happening here, and then the green bar closing higher than the previous close, right? Confirming its buying volume, right? And then a little bit of a small shakeout here. Then, of course, those of you even entered on the 1 hour, if you did enter, you and I know that we have mentioned this many times that, you know, this, like what we say, is like the dance of the market or the volatility, you know? When this happens, do not panic. We already have even our volatility numbers. How much will it stagnate before even coming up? We've done so many trades on this, right? In real time on the DAX and all that, where it comes against us, goes near the stop loss, and then shoots back up towards the target, okay? We don't get feared of that because we got our volatility numbers. And how do you get the volatility numbers? You can get all that from the MAE numbers here, okay? We've done so many videos on that. I think for now, what I would do here is, right, on here, as you can see, at the moment, we're also getting a green dot by the VSA also, and the volume confirmation. So I'll stick on with this trade as of now. The other thing is, right, so some of you are asking, where do I find out more about all of these things? So let me show you a few things that you guys can go to. Definitely on the framework. Now, some of you asked a good question for those newcomers who just came in. You're asking, okay, why do we take the 180R number? What's the reasoning behind that? The reasoning is actually behind the open equity data traders, okay? All the open equity data between the swings, we have found the distance, okay, that it runs each swing. What's the overall distance that it runs? So if I do this very quickly, and you will start to see that. Let me do that. And the understanding behind what we have done here, right? So this 180, see, it tells you how much did it run, how much did this swing run, right? How much did this swing run? All of it, it will tell you, okay? We have measured it all. Now, to understand all of this, what we've done here, if I string that, it will tell you much before. So how much has it done? 1.73, 7.8 ATR. It's telling you all that, isn't it, over there? Let me just quickly just check that. That was a 180, that was 21 cents. Yeah, it's correct. So you can see that. Now, the understanding behind what we have done here, what is this? The blue arrow, the blue dot, the top and orange dot, all that. I would say detailed understanding, go to 7steps to CTP.com. Okay, I've mentioned that before. Those of you newcomers, you definitely can look at that. 7stepsctp.com. After you put your details in, name, email, or number if you want live trading updates, then you can get the 7 videos sent to you. And please watch through that, okay? It will really help you a lot. And the other thing also is our YouTube channel also, okay? youtube.com/master the markets. Now, a lot of you have said that, okay, I subscribed to it, but why don't I get the notifications when you and Gavin go live? What you do is, traders, you click on this drop-down box over here and click on the all bell icon. This will ensure that whenever we go live, you will get it onto your phone. Okay, you can watch it from your phone or join us on the Zoom where you can ask any questions. Okay, so you can do all of that. And for Trade Guider also, you can go to youtube.com/Trade Guider. Okay, and you can then also do the same thing over there. Subscribe that, and then you can hit the all bell icon. At the moment, we are streaming it live on Trade Guider channel. We'll restream it live on our channel very shortly. Wednesdays, we go live as well on our own channel as well, based on price and volume again. So we do it 2 days in the week for now. We might increase it in the future, maybe include other topics as well. But for now, you can follow us on these 2 days and you can apply it in your own trading. Because most of the trading that we show you guys is very cross-transferable, okay? Hopefully, I've answered most of the questions what you guys have asked. Steve, yeah, I was meant to get a session, but I know there's MMS live today as well. Gavin, if you're free, then you can join us there also at 7 p.m. It's for all the paid members, right, of Price and Volume, SMI and VSA subscribers. We'll be doing our monthly momentum session. Every month it happens once. We'll be doing it later today at 7 p.m. Okay, so join you all for that. In terms of the performance, what we've done, I will go through some stocks and indexes of crypto. For longer term investments, we'll also take a look at some psychology videos to keep us in the momentum and the motivation and the consistency as well. Okay. In terms of our end of day trades, we're really having a really good run on silver. You see, as of now, you can see that on Brent, it still hasn't confirmed a blue dot, hasn't taken up our entry line yet. So we'll wait and see how that turns out to be. In terms of silver, what are we getting at the moment? Let me see. So silver, we have an end of day trade going on in that one there. Those of you on the Vedanta Elite Ops subscription, you will have already got that as of 2 days ago. We had an entry here where the green line is, red line for the stop loss based on MAE numbers statistically validated. And then after that, then we are waiting for to place a target on this. We'll let this run for a little bit. We're taking towards a 20% OE number. Those of you on the 50% OE strategy, you will have already hit the target by today. Okay, that's on silver on our end of day on more swing trading strategy. Okay, right. So we'll wait and see how that goes. I know we have run a little bit above time a little bit. We will put the updates onto the YouTube channel, or you can follow us on also our Trading View channel as well. Okay. Right, Gavin, you want to say anything else? I know
Yeah, no, just a great session, really good. Everything's working out. I think there's a lot that you and I have got to talk about, especially with the conversations I've been having today. We've got to talk about the show in London. So I'll call you, or you can call me when you're free afterwards. That's absolutely fine. I'm available now. Been a brilliant day, and actually, I have to say to all of you listening in, we've got a lot of new people that have joined us. Welcome to all of you that have joined us. We will be supporting you as we go forward here. Got some new stuff coming, and yeah, if you're coming to the London show, a couple of you have emailed me to say you're now going to come. Yeah, do. We're still figuring out exactly the time of exactly when we start. I think it's around 10 a.m. But yeah, if you're coming, yeah, we look forward to meeting you, and we'll have a good day. And ultimately,
next Friday, isn't it? Yeah, next Friday, 4th of April.
It is. Yeah. It's a week tomorrow. Yeah.
Yeah, we send out all the emails as well, traders, and you can also vote for us as well, for Gavin and I. So yeah, all that should be in your email. I think we'll be sending out 2 more reminders, so
Yeah.
you guys can keep on the lookout for that.
Yeah. All right, Too. I'll give you a call when we finish here. and we'll have a chat.
Yeah, no problems. I think we can wrap this up. We can see how this one goes,
Yep.
and we'll keep you updated. We might not even get a trigger on this, but we'll keep you guys updated on this one, and we'll see how that goes. All right, traders, I guess that's pretty much it on this session. Thanks for joining in. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master. Take care and bye for now, everyone.
Take care.